Hello and welcome. Today is Thursday, the 22nd day of December 2016. Welcome to the Silver Charts channel. My name is Derek. Let's take a look at Bitcoin for today's video. And within this chart, I'm going to, I got two charts I'm showing, the 8-day chart as well as the daily. I'm going to not put the dates on the bottom because it's very difficult to do when I'm showing this amount of data. And I also put the key areas in. First off, this chart started on the 8th day of January 2013, which means it's about a 4-year span chart. And from this key point, which would have just been like around February or late January, it goes up from about 100 to 1100, and it does such in about 10 months. And then, of course, the retracement, some wild moves along the way, but that happens a lot within some of the key highs. Very common situation to have extra volatility. That's definitely not the case now when we look at our volatility. It is very, very low in comparison to years ago. Then you have this key low of 163, which occurred January 14, 25, but there's this low that might predominate it, because after this low occurred, it kind of went sideways for a while, didn't really do much, and the breakout of the bull market really did start within this low and breaking above this resistance in here. So the breakout point was pretty much here, and then the breakout low, and then the key low, I guess, whichever is in there. However, as this moves further towards the upside, we can see on here on the break of resistance, you go from extreme microscopic volatility, and then you have 1, 2, 3 decent red candles up. Correctionary phase with a large volatility in comparison to such, which then resulted in low volatility, and then the break of this resistance had an okay green candle here. However, breaking this one, there's only been one candle, the one occurring now, which is decent, and we've seen before, okay, break and you have like 3 green candles up. So is it possible that this could take a couple more? That's 16 days, that's 2 weeks and a half. Even the next month, for that matter, up to about the 1,000 mark in a month. Historically, or at least data analysis from the past shows that it doesn't look all that improbable. When we switch this, Fibonacci first. I'm going to switch this to the daily chart, but you got 629, 829, and 922 as some key levels. And the 829 is where it stands currently. As far as the last point, which is somewhere in around here. So you'd have to take a look at that on like an hourly or a 30-minute chart to get a good grips of it. The 629 mark, as we can see, was significant. And the looking at this 18 average band, it's so tiny, it's so like congested, or however you want to look at it, tight, I guess. Well, that's low volatility. So we're seeing that come into play. It's also low volatility in a directional move, which is obviously up. But I got no Fibonacci on here because why would I need it? It's at its highs. There's no reason to talk about Fibonacci to the downside when whatever highs we're going to choose isn't even established at this point. It's at 857 now. Price action is at 850 as of 9/14, and it's probably going to be going higher. It's going to, basically. As we can see on the break of this point that we've had these small green candles and now 2 relatively extreme large candles in comparison, but still decent sized moves. A move that has seen it go from like 780 something to 857. Well, pretty good. So anyway, I'm going to conclude it right now, and have yourself a great day. Bye-bye.